What's up, guys? This is Felipe from the Noob Trader, and in today's video I really want to just quickly talk about the 10-year yields, their treasury yields chart, which based off the last video, I was mentioning how we really need to start becoming concerned about this chart, especially if we're trading gold. We need to understand the correlation between the 10-year yields and gold price, and just essentially doing a very quick warning video about this chart. So let's get into it. So as you can see, this is the day chart. Over the last few days, we really are continuing to break through this resistance range that we previously drew on this chart before. And the reason that this is so relevant, especially when we're trading gold, is just because there is a correlation between a negative correlation between yields and gold price typically. As 10-year yields start to go up, gold price typically goes down. And that's really kind of what we're seeing today in just terms of the general price action, I feel. As there's more and more volatility in the 10-year yields chart or in the 10-year yields percentage, you can see the fear really starting to creep in more than anything into the gold price and just the general supply and demand right now of the gold chart. Okay. The 10-year yields also typically, really forecast what we're kind of expecting to see, later on with the dollar. So I think the big thing that everybody needs to understand about the 10-year yield chart as well is that, this is what you really need to be worried about when it comes to, the Fed raising interest rates, etc. It's not just that the Fed is raising interest rates, so therefore the dollar is going to go up, but rather, because the Fed is raising interest rates, people are going to be more interested in putting their money in bonds. This is from a theoretical standpoint, right? Investors are going to be more interested in putting their money into bonds or other government products that can earn interest with their dollars, and therefore they're not going to be that incentivized to actually hold gold, which is not an interest-bearing asset. Okay, so that's the pure logic behind this. So now, especially with the anticipation of the meeting on January 25th, 26th with the Fed and the FOMC meeting, right? I think you can really see that people are anticipating, further essentially, FUD news about interest rates. And this certainly is leading to the yields chart, slowly increasing over time. Okay, even though the dollar still hasn't actually bounced like we were kind of potentially expecting when we were discussing gold and just the general market sentiment in the last video. Okay, so just be warned, guys, that if you're trading gold, you really need to pay attention to this chart, especially during these times. It's going to be very relevant, and it's surely going to be relevant in the days leading up to the Fed meeting on January 25th, 26th, and probably for the days after that as well. Okay, this is just a quick video, quick tip. Hope you guys understand now why it's so relevant to watch this yields chart when trading gold. Just because yields is going up doesn't mean it's not a good time to, trade gold. In fact, gold right now, there's not that much volatility when you look at the longer term time frame, so it's kind of very easy to just play that kind of general swing. But it's still very important to understand the fundamentals and understand this chart. Okay, if you guys have any questions, feel free to leave a comment below. If you like this content, please consider giving a thumbs up, and I'll see you in the next video. Take care, guys.